It is now 1 o'clock by my watch of the Banking and Finance Committee meeting. Senator Dixon, would you start us off in a word of prayer?
Yes, sir, Mr. Chairman.
What number are you? Sorry.
10. Everyone, please bow your head. Dear Heavenly Father, Lord, I pray for discernment and wisdom for this board and for all elected officials under the Gold Dome today, Lord. And I also pray and lift up our servicemen and women that are serving here at home and abroad. And I pray that you put a hedge of protection around them and bring them home safely. In Jesus' name I pray. Amen.
Thank you, Senator Dixon. All right, we're going to start off today with the two banking and finance cleanup bills, annual housekeeping bills. So we've got Representative Williamson here, and then we've also got Bo Fears with the department. So Representative Williamson, for sake of time, you take it away. Let me get
microphone on.
You're on.
Thank you, Mr. Chairman, members of the committee. I am Bruce Williamson. I'm the state rep for Walton County. Had the honor of carrying the annual Department of Banking and Finance's housekeeping bills now. I'm told this is the 9th year in the row. And to the best of my knowledge, in those 9 years, we've only had one little hiccup that Senator Jordan was gracious enough to point out to us in committee one day. And this bill comes with the, so let me sort of go back and tell you overall, it is the housekeeping bill. It contains revisions to bank, credit unions, installment lenders, money service businesses, money transmitters, sellers of payment instruments, check cashers, mortgage lenders, and their associated broker laws. Basically, anybody touching money in Georgia is subject to review and oversight by the Georgia Department of Banking and Finance, absent a federal entity that oversight or regulatory committee situation. And oftentimes with our state chartered community banks, in particular our depository institutions, you've got both federal regulators and state regulators at the table. It's supported by the Georgia Bankers Association, the Community Bankers Association, the League of Southeastern Credit Unions, Mortgage Bankers Association of Georgia, the Georgia Financial Services Association, and the Georgia Installment Lenders Association. Very importantly, no one has expressed any opposition at any time during this bill. It's extreme. I've got to brag on, and again, this is Bo Fears. He is the attorney for the Department of Banking and Finance. The department does an extremely good job of talking to all the interested stakeholders on anybody touching consumers' money in the state of Georgia. Importantly, there's consumer advocate organizations. For example, I believe it's Georgia Watch that was at the table on this one. And it comes without objection from any of these people, because all the discussions have been held in a proper manner, bringing everybody together at the table to result in this particular housekeeping bill. Over the last 9 years, I can say that we've done a great job as a General Assembly really bringing our banking laws into the 21st century, making them more efficient, more transparent, more customer friendly, all with an overreaching goal of protecting depositors' money and making sure that our consumers are treated fairly and well protected. So the bill actually is going to be, it updates, we continue to find mistakes, archaic language, and correcting terms. It updates some reporting requirements, updates changing control requirements. It adds LLCs to the list of ownership entities that can own financial institutions in Georgia. As we well know, that the world's kind of moved to the limited liability companies. It gives credit union boards more meeting flexibility. It gives smaller credit unions, in particular, some loan flexibility. In our recently enacted legislation a couple of years ago, for credit unions with assets under $15 million, it became problematic for them to be able to make some small loans that they needed to be able to make to meet their customers' needs. So with oversight and discussions through the department, it was their potential loan losses have been mitigated, but it gives them the flexibility to meet needs of the smaller financial credit unions in particular. With that, Mr. Chairman, I'm happy to do a line-by-line rundown, or however the chair would recommend. I can hit some of the relative sections and try to give an overview and open it up for questions, however you'd like me to proceed.
Does anyone member of the committee have questions now?
I have one question.
Okay. Senator, you're number 6.
Page 11, line 266. And I think I know what this means. So with respect to this, I knew that there had been a practice where certain lending companies, businesses, or whatever would be chartered in a different state, specifically states that had absolutely no regulation with respect to lending limits and the like. And then they would claim that the laws of the state that they're chartered in are actually the ones that control and not Georgia law. It looks like with respect to this kind of cleans that up to say, yeah, it applies unless it's contrary to Georgia law.
That's correct, and it also, for example, if you're in another state and you're allowed to do payday lending, right? You can't then come into our state and do payday lending. So that's
And
what it's
that's
designed for.
that's what the payday lenders were doing. So
Correct.
Thank you. I appreciate it.
Senator Aaron Vitarte, did you have a question? Okay.
I will say it's the least moving parts of any of the 9 years of housekeeping bills that we've carried. So now I'll address it on the change of control. That's always peaked. That I went straight to that when I first sat down and started looking at the bill. And change of control was defined as it's more than 25% ownership change of control. It's been pared back to, so you could have, as we all know, that you come in an organization own 24.5% and effectively have control, voting control in given situations. So that was pared back to, I believe, 10% in this bill. Is that correct? Was it 10%?
Yes, so if no one owns 25% or more, then the person that owns the most between 10 and 25% will be deemed to be in control.
That's what I was going to say. So, but it gives the department an opportunity to vet those that are then deemed to be the ones in control with more robust background checks, criminal histories, and things like that. Again, with the eye of protecting depositors and consumers in the state.
Any further questions? Or do y'all need a little more time to review?
Make a motion to pass. Second.
All right, we have a motion to pass. Any discussion? I don't have anyone signed up to speak to the bill, which I should have, so it doesn't matter. All right, so doesn't matter if I did that out of order. So we'll, all those in favor say aye. Aye. All opposed, same sign. All right.
Thank you, Mr. Chairman, members. And incidentally, it did pass the House of Representatives unanimously, so pretty bipartisan bill.
Okay.
The second bill I'll bring before you today is House Bill 899. LIBOR, which is analogous to our Wall Street Journal Prime that everybody sees. A lot of times notes have in it that is you're getting either most people refer to it as a prime rate note plus or minus certain percentage points depending on how much money you borrow and your credit quality, assets, the collateral, and all such as that. We're pretty familiar with that, especially in the smaller banking space. Well, there's historically been another pricing mechanism known as the London Interbank Offered Rate. It was in my layman's mind around it, basically it was London banks. It was a pricing that they paid for overnight deposits back and forth to one another. Analogous to our Federal Reserve flow of funds. Well, there was some misbehavior in the LIBOR market back in 2015 during the height of the meltdown, the ramifications that were coming on during the worldwide financial banking crisis, if you will. And regulators in Europe and U.S. regulators came quickly to consensus and agreement that pricing mechanism needed to be replaced. So it has been through international accord and agreement, a replacement mechanism known as SOFR, which is a secured overnight financing rate, and it is based on it's benchmark trades, I believe, by the Federal Reserve. So it's more transparent. It's not subject to manipulation like it was in Europe, and it comes to the full agreement of the entire international banking community and consumer advocacy organizations as well. So in essence, what we have here is all the financial institutions have been moving towards replacing this LIBOR language, getting rid of it in all the notes, consumer notes, mortgage instrument notes, promissory notes issued through banks, have done a real good job of cleaning it up. But the concern is, absent any federal step in, and the Feds Congress just has not gotten their act together yet. We anticipate they will, but as of December the 31st of last year, LIBOR has gone away with our financial institutions, but as you attorneys know, oftentimes these pricing mechanisms are putting other contracts. It could be business contracts, it could be installment sales notes for businesses, it could be leases for that matter, on rent escalations and things like that. If there is no fallback language in any of those notes, if there's fallback language saying if LIBOR goes away, it falls back to some other pricing mechanism, that's fine. But the fear is, and the reality is, there's many, many, many notes out there that has no fallback language. So I believe it's June of next year that LIBOR, June 30th of next year, there is zero LIBOR even going to be published. So you would have the awkward position of having two Georgia, a lender and a borrower, with a note or some kind of a instrument that was referencing that, and neither the borrower would know how much to collect, nor the the borrower know how much to pay, nor the lender know how much to collect. And this bill is model language that's being adopted by other states, trying to make it model language consistent among the states that gives sufficient fallback language should that occur. So I probably over-explained it, but I'm happy to answer any questions.
Any questions from the committee? And I can't believe nobody signed up to speak on this one, but so I don't have any questions. What's the will of the committee?
Motion to pass, Mr. Chairman.
Got a motion to pass on HB 899 LC 500259 ER. We have a second from Senator Jordan. And any discussion? No discussion. All in favor say aye. Aye. All opposed? All right, motion passes unanimous. Thank you, Representative Williamson. Who will be carrying the bill for you?
Senator Kennedy's graciously agreed to tote the water for me in the Senate.
How many years will this be for Senator Kennedy on this?
7 or 8.
Pretty close.
Yeah.
Thank
Wow.
you. Appreciate it.
Wow.
Thank y'all.
All right, thank you very much. All right, next up, we are going to have Senator Robertson. Senator Robertson, come on up. And if y'all look in your folders, we put in there yesterday actually a substitute to his original bill, SB 470. So we'll be working off of LC 500353S, as in Sierra. So, Senator Robertson, if you don't mind, just kind of briefly tell us what the original bill did, and then kind of had all parties come together and work on some agreeing language, and that's what I believe your sub does. And if you'll just walk us through that real quick, we'll get you on your way.
Thank you, Mr. Chairman. I appreciate it. Committee members, the original legislation was an attempt to further balance the criminal justice system, if you will, as the things we've been working on for several years, to give those who may have gotten off the path during their adult life and committed a felony or something else, trying to integrate back into the workforce. And we were trying to make sure that our banking industry and mortgage industry in particular was allowing individuals who had not committed any financial crimes and other types of crimes, but who were felons, the opportunity, especially those with special degrees in financing and other things, of having the opportunity to merge back into this particular industry. And we were close up to the Federal SAFE Act, which currently, if you commit a felony, you cannot, for 7 years, you're excluded or prohibited from working in the mortgage lending industry. And if it's a financial felony, you are prohibited for life from working in. So what we were trying to do is make an avenue so some of those individuals would be able to work here in Georgia, because Georgia prohibited any felon from working. And we had some rub with the mortgage industry and the department, but as you said, under your leadership, Mr. Chair, we were all able to sit down and work it out. And basically, what we did is, if you notice in the substitute on line 12, we have defined covered employee. So the mortgage industry in Georgia will be in compliance with the SAFE Act, but at the same time, Georgia maintains its strict protection of this fragile industry by not allowing any felon to come in and handle money in the mortgage industry. So what it is, if they want to hire some peripheral employees, whether it be the custodians or whether it be other jobs of individuals who do not touch money, they can do that now. But if it is a financial crime, they still are excluded from working in the mortgage industry for their entire life. These are individuals, and I know only in Georgia. Has absolutely nothing to do with banking or nothing to do with the mortgage lending industry, but it gives those types of opportunities gives opportunities to those types of individuals who have a passion to work in the mortgage industry, which is foreign to me, to come in and do that.
Yeah, if you don't mind, Senator, I'll add that help specify when you say work in the mortgage industry, really, if they're going to touch a Georgia mortgage, that's kind of where we draw the line. And,
correct. And
one of the things I learned during your bill was that, in this state, we were ranked towards the bottom in as far as fraud goes in the mortgage industry back to about 10 years ago. And so when this original language came in, we quickly started climbing up, and so we did have some concerns from the department, and we've addressed. We think that that those that work in other states, there was also some language that was kind of preventing them, if they worked in another state and they were touching mortgages in other states because they couldn't touch it in Georgia, that some of these national companies couldn't hire those people. So we've addressed that, and I think some of our national folks are happy with that, and they're covered. I think the department's covered. We're still protecting ourselves against fraud.
right.
And Chairman, are you happy
I am,
with your language?
because I am, and clearly, this removes Georgia's prohibition on companies hiring persons with felony convictions in other states. It allows companies within and outside Georgia to hire persons with felony convictions as long as they aren't a covered employee, and those covered employees are those protected jobs that actually do touch the money. Which are the mortgage loan originators, the underwriters, processors, and anybody else directly involved with the loans related to, and what you said, Mr. Chairman, Georgia property. And then finally, it maintains the ban on companies having directors, controllers, partners, and major equity holders who have prior felony convictions to kind of keep those nefarious groups, associations, and gangs and others from getting into our mortgage industry and turn it into something it shouldn't be.
Okay, you got a question from Senator Jordan?
Thank you for pronouncing her name correctly, Mr. Chairman.
With respect to the initial bill, and you even talked about it, that the felony, or at least a portion of this bill, felonies would be limited to, obviously, fraud, dishonesty, breach of trust, those kind of things. Is that continued into the sub? Or?
That's under federal statute. Under the Federal
Okay.
SAFE Act is where they put down the 7-year prohibition for any felony, and then the lifetime prohibition for financial related felonies.
Okay,
But that
thank
was
you.
under the SAFE Act. Yes, ma'am.
Any other questions? Did you have anything else to add, Senator?
No, sir, other than I appreciate your being able to work with us on this, and I would appreciate favorable consideration from the committee so we can get this moving forward and hopefully fill some more of these open jobs in Georgia.
Well, I appreciate you bringing this bill forward. So
Thank you, sir.
So what's the will of the committee?
I'll make a motion to do that, Mr. Chairman.
All right, we have a motion to pass on SB 470 LC 500353S from Senator Dixon. We have a second from Senator Jordan. Any discussion? All in favor say aye. Aye. All opposed, same sign. Passes unanimous. Thank you, and safe travels to you. I know you're headed down south. And
Thank you, Mr. Chairman.
Godspeed.
Appreciate it. Godspeed to you.
All right, meeting adjourned.